Right, traders, welcome back to the channel. Here we have the Euro USD 4-hour time frame, and I'm going to be going over some basic ICT concepts, a price action study that of a potential trade you could have taken on the 17th of May, right? So this is a trade I didn't take myself, but it is a trade that you could have taken using basics of ICT. So what we have over here is we have bearish structure that we're currently dealing with, right? So what we have over here is we had a break of structure over here. So this here validated our bearish structural range. And now since then, of course, we have a swing high up here, right? So we have a swing high up here and we have a swing low down here. So this gives rise to, of course, our premium and discount arrays, okay? So again, I've discussed on a previous video the four main things we look for as an analyst when it comes to determining our overall market narrative, the order of that being structure in this very order. We have our structure, we have our dealing range, we have any potential fair value gaps, and we have PD arrays, right? This is kind of the order we look at. And so with this in mind, we've understood we have bearish structure, hence the break of structure down here. We have a bearish dealing range, right, consisting of this swing high and this swing low over here. Oh, if I make that clear for people, we have a swing high and a swing low down here. Now for the premium and discount arrays, anything above the 50% level over here is a premium. So of course what we had over here is we have two premium fair value gaps over here, right? If I quickly label them out for people, we have a fair value gap over here, and we also have a fair value gap just up here as well. So these give rise to two POIs in particular, right? So we have a POI over here. So this POI, I always label my POIs in gray. This POI is going to be very important to understand later on. This is a very, very important POI, right? Extremely important POI, because this is our overall target. So where we are in price right now, we're currently here in price. We're situated at 1.86, right? So the overall target is for price to get up to this POI. And the reason why is because this is a firmly or a deeply, deep premium POI, right? Deep premium priced POI, right? So this is the reason why this is our overall target. And to quickly go over the rules as to what makes a valid POI, right? What makes a valid POI is three essential things, right? We want to see it break structure. So what we've seen price break structure over here. The last structural low over here was indeed broken. Okay, so that's the first thing. The second thing is that the POI must leave an inefficiency or a fair value gap, and price has done that. As you can see, the blue box over there represents an inefficiency in price. And the third rule, very important, is that from an ICT perspective, we want the POI to be in the premium. So we're looking for a premium just like this. And so from here, we understand that this is our next overall target. So if we head down to the 50-minute time frame now, this is where we begin to dissect some basic ICT concepts, right? So what we had over here is we had price on the CPI day. So Wednesday, the 15th of May, sorry. So again, what we had over here is we had the CPI wick over here. So the large candle over here was essentially CPI, a bullish reaction, right? A bullish reaction towards CPI. And so what we saw is we saw price breaking structure, right? So me personally, I don't trade CPI because I'm not a gambler. I want to wait for the news events to be integrated into price before taking any kind of position. And that's exactly what this trade aims to dissect, right? So what we've had over here is we had a breaker structure from CPI. And since then, we've had another breaker structure from CPI as well, right? So from here, we have a structural range to work with, right? So we have a structural range. And the structural range essentially consists of this swing low down here, all the way up to this swing high up here, which is also the Asian session high, right? So this is the Asian session high from Thursday, all the way up here. So we have a swing high up here, and we have a swing low down here. So from here, you need to understand that this now gives rise to our fair value gap. So what we have over here is we have a fair value gap over here, right? This is an FVG or a fair value gap, and this therefore becomes an area that we want to be looking to buy from, an order block or an M15 fair value gap, right? So this fair value gap is high probability simply because, again, it's the same rules over and over again. What we have over here is we have a discounted PD array, right? We have a discounted zone over here. So we have anything below the 50% level, which becomes essentially our our discount. We've left a fair value gap and we've broken structure to the upside. So all of this is what gives rise to this POI over here, right? This order block over here. So this was a fantastic Friday scalp trade, right? Notice how this was a Friday scalp trade. So this is the 17th of May. again, you want to have your stop loss just below the order block, and here you can target a nice 1 to 2 hour trade, right? Now, this is one of the essentially market maker buying models, right? Essentially the same old concepts, right? With what we've seen is we're buying from a fair value gap, right? So we have a fair value gap over here in this region, and now we understand price has engineered the previous day low, which is a natural thing that the market will do. Thursday's low over here was essentially swept, which coincides with Asia lows. So if I can quickly get rid of the Asian range chart, what we see over here is we see equal lows over here. So this red line over here represents the equal lows. Now, it's not a coincidence that this is the previous day low and this is Asian range low. This is how the markets work, right? The markets want to sweep sell-side liquidity, right? Before heading in the intended direction, before targeting buy-side liquidity, right? So again, what we have over here is we have an Asian range high, which is the next target over here. So this here is the Asian range high, and this here is the Asian range low, right? So we understand both liquidity pools have been swept, and our job as a trader is to simply target sweeping the Asian range low and then targeting the Asian range high. So this here is a quick case study based off a Euro USD scalp that you could have taken understanding basic liquidity concepts.